Hey, everybody. November 13th, the market update desk with Scott Riley, NMLS number 1571 524. Well, we got the inflation numbers today, and while they did show an increase year over year, the monthly did come in as expected, and that's really because the replacement numbers that fell off from a year ago were very, very small numbers. We've seen some whipsawing going back and forth in the bond market and mortgage-backed securities. So let's review what that CPI report showed us. So headline inflation rose 0.24%. So that's going to show us 0.2% in the non-rounded number in the media. That gave us a year-over-year uptick of 0.2% from 2.4 to 2.6% year over year. Now, core CPI, which strips out volatile food and energy, showed a non-rounded number of 0.28. So the media is going to show that rounded number is upwards to 0.3%. That brought the year over year to 3.3%, which is actually flat from last month. Now, the concerning part is the pace or the trajectory of what we've been doing. So if you look at the 6-month annualized CPI rate, we'd actually show inflation at 2.5%, which is really getting close to the Fed's stated goal, 2%. So that's good. But the concerning part is a trajectory. So when we look at a 3-month run rate, we show that inflation's at 3.5%. So we're getting those headwinds that we knew we were going to get with these replacement numbers in the late part of this year. That's not going to really get caught up probably till the first part of next year. I suspect next month's numbers are not going to look fantastic either. Let's look at what drove that inflation. Shelter, the number one thing, again, of course, shelter, it really constituted about 75% of all inflation, maybe even a little bit more than that. So total shelter showed an increase of 0.38%, brought the year-over-year shelter inflation to 4.88%. Now, the subcategories of that, rent went up 0.3%, which was flat. Owner's equivalent rent. Now, this is always a big volatile one because it's an imputed number. They're not looking at actual data. So on the phone calls, they're asking owners to say, hey, what do you think, if you had to move out, how much do you think you could get in rent? And most people, if they don't have a very in-depth real estate background, they really don't know. And human nature is to overinflate the value of your personally owned item. So the owner's equivalent rent showed an uptick of 0.4%. Lodging away from home, which is also another volatile number, came in at up 0.4 also. Now, airline tickets, wasn't our friend either. That showed up 0.3. Used car prices up 0.6 point. Here was a fun one. It's the first time in months, I think, maybe a year plus, that I can say motor vehicle insurance inflation cost went down. So month over month, it's not much, but we're going to take it, went up 0.1. So year over year motor vehicle inflation dropped from 16.3% to 14%. Hey, it's not a ton, but we are going to take it. So the market really whipsawed. We had a great start to the day with mortgage-backed securities, which are what mortgage rates follow, and the 10-year bond came down. Now, later in the afternoon, because we're doing an afternoon report, mortgage-backed securities are up a little bit, 9 basis points, as opposed to where they were up, I think, 28, 29 basis points. And the 10-year is now actually up. It's in the green, not the red, to 4.451. One of my concerns in looking at the resistance levels in these channels of what bonds are trading in, it's pretty wide range. We're approaching that 4.4945 in the 10-year. That is a very important resistance level. We've got this big channel of what this is trading in, and maybe from about 4.21 all the way to about 4.45 now. So we definitely need some mojo on our side to get this trend line, going back down. And that may not come until we get more jobs data specifically, because that's something that can help us out. Purchase mortgage applications rose by 2% last month. What that tells us is many buyers are sensing that this is the time to buy, that even if rates are elevated, they can get houses under contract that they quite honestly had no shot at over the spring, summer, early fall due to just the competition and the need for appraisal gaps, higher down payments, competing against significant down payment competitions all the way to cash offers. So while the year over year trend line, end number didn't help in inflation data, the month over month came in as expected. So my thought is, we'll get past some of that headline stuff probably tomorrow, Friday, and maybe kind of reverse some of the upward push in mortgage rates we had today. We'll keep on top of it and let you know what's going on. Scott Riley, the Market Update Desk, 616-293-2189. The Market Update Desk is your original singular market news source for West Michigan. By the way, we had a buyer get their offer accepted today. We're working on some other ones. Let us know if we can help you out. Thanks so much. Have a great afternoon, everybody.